Hello, everyone, and welcome back to yet another episode of WagMe TV. Episode 13 today, and you'll notice we're missing one of our fellow homies, Armada. He's out on vacation in Hawaii, so wishing him the best out there in Hawaii. He'll be back next week, but this week I'm joined by my other two homies, the All-American, Ev Smith, and the NFT Lord himself, Alex Garcia. How we doing, boys? Get a little cheers. Episode 13.
Cheers. Pour one out for Mata. We miss the man. But
yeah,
I will say that the helicopter tour pictures that he had going were pretty awesome. So
oh damn.
isn't it?
Yeah. Don't feel too bad. Don't feel too bad.
Right.
No.
Yeah,
okay.
exactly. It definitely looks like he's having a great time. I'm jealous. I need to get out to Hawaii. I haven't have you guys been there?
I don't think so. Not yet. So I'm hoping
yet.
the next couple of years, make it out there.
Yeah, I'm jealous. I want to go.
His stories are definitely making us all jealous. So cheers to you, Mata, and we'll see you next week. But for this week, we have some interesting topics. We're gonna chat some Ethereum 2.0. But before that, we'll kind of get into what we're just kind of seeing in the markets this week. Honestly, kind of a range bound week. Not a whole lot. It seems like everyone's kind of sitting on their hands before the June Fed meeting. Equity market continues to kind of puke. We had a couple pretty interesting, prints in terms of like new housing sales and stuff missing pretty heavily, things like that to kind of signal, economic slowdown might be on the way here. What have you guys seen so far in terms of broader market wise? What are you guys' thoughts?
Yeah, I think it was nice to finally have like a week where we could take a breath. It felt like it had been a couple weeks in a row there where we were just puking and there was bad news everywhere. So it felt like a week where so far that the market's just kind of taking a breath and steadied itself. It was really interesting. We saw 150,000 less houses sold than what was expected. That was that number that you were talking about.
Mm-hmm.
That can kind of be expected with the interest rate hikes. That's going to raise mortgage rates and decline the amount of demand that's out there. So, I think for most millennials, we want to see a little bit more of that because we're hoping we're not going to have to be lifetime runners. But yeah, no, it was a steady week in the market. Kind of needed to take a breath, but yeah, still a lot on the horizon.
Absolutely. I mean, I think I completely agree with you, Soham. Like I feel like everyone's basically waiting on pins and needles every month or couple months for the Fed and Powell to come out with their announcement. Like usually it's going to range between, at least at this point, a half a point and 75 basis points. So it'll be interesting to see the reaction because I think everyone's, at least for the next two hikes expecting 50 basis points. But if we see 75, we could see some of that home market demand slow down at an accelerated rate. So it'd be interesting to see if that happens as well.
Yeah, absolutely. And so, I mean, you guys know, I always am keeping an eye on the 10-year treasury yield. So let's pull that up here. And what's been interesting for me is that, even while the equity market has been puking a bit the last week or so, Bitcoin has been like relatively solid, right? I mean, we had that huge sell-off, when all the Terra Luna news was coming out and all of that, and just general panic selling that week. But since then, things have gotten kind of stabilized in like the 30K range, while the equity market continues to go down. And so if you look at kind of the last, say, month or so, what you actually see is 10-year treasury. I mean, it peaked, local peak, about 3%. And since then, it's rallied quite a bit in terms of like the bonds rallying, yields going down. So obviously, this can, I'm sure DXY, I haven't looked at it, like the dollar index has probably been, getting possibly a little weaker
Yeah,
due to
it
this,
has.
right?
I
And
think
so you can kind of put those two pieces together and possibly figure out why Bitcoin has kind of stayed kind of steady, right? We've talked about the correlation with DXY, with the 10-year treasury, and with just the strength of the dollar in general, where when the dollar gets weaker, Bitcoin tends to outperform. And so it feels like there might be a little bit of that at play, kind of right now.
Yeah, and I think it's fairly uncertain how the Fed is going to go about raising rates. We all thought that there was going to be 7 to 9 rates this year, while we've had basically talk about 3 straight months of 50 basis point hikes. So seeing how those remaining rate increases will happen, I think is what is leading to this kind of variability in that 10-year treasury. So maybe some people are seeing that we're not going to be able to curb inflation, or inflation is going to fall over. And with that, they don't need to continue to raise rates, which would be very nice for the economy. So
Right. I mean, yeah, it kind of goes. It's a very interesting. We've talked about it before, and we'll talk about it again. But just like the balancing act that the Fed is being forced to play here, all their fault. Like, don't get me wrong. Like, they're the ones who put themselves in this scenario. But getting out of it is going to be very, very tricky. And so we'll keep an eye on the markets and kind of see where things go. Did you guys see any interesting news or anything this week?
Around the Fed, you're saying?
Or just general, like crypto news or anything? I mean, I know there was one thing I saw. This one where JP Morgan actually today, their strategist came out and actually said that, digital assets, namely Bitcoin, was kind of their alternative asset of choice, even over real estate, because it's so pricey at the moment. So, that is, preferred alternative asset class right here. So, that kind of goes into everything we've been saying in terms of the bull case for Bitcoin really being the institutional investing getting behind it. So interesting to see that, even in a bear market or, sell off like this, we're still seeing kind of these positive news articles when it comes to, the adoption of Bitcoin and crypto as a whole within the institutional investing space.
Right. And see, I think we had some news that Terra was executing that recovery plan that we talked about last week, right?
Yep, they were. They basically finalized the plan to basically hard fork the chain into a Luna Classic chain and then a Terra Luna chain, basically the same Luna token, and they're going to airdrop tokens to people who held UST post attack and pre attack as well. So I'm happy to pull up some of those numbers as well.
Interesting. You got to wonder if it's just a last ditch effort and it's just dead forever, or is there any hope?
Yeah, I know. It's like I kind of think they're not going to recover from the tainted brand. Like I don't really see it happening, but I can pull
it's
up.
It's got to.
You guys see that?
Yeah.
All right. So the pre-attack Luna holders are going to get 35%. Wallets with less than 10K Luna at that snapshot, they're going to take a snapshot tomorrow, are going to get 30% of their airdrop unlocked at the beginning of the chain. So the network's supposed to launch on the 27th, which is Friday. And 70% of that's going to be vested over 2 years with a 6-month cliff. And so they have these for, under $1 million and over $1 million as well, just 1 year cliff. And obviously they'll get more since they held more Luna. But then for UST holders, they're kind of only putting up, 25%. They're really leaning more towards UST holders, which is kind of interesting to me. But really
leaning more towards Luna holders.
Yeah, Luna holders, right? I mean, because I feel like USC holders got even more destroyed because
Yeah.
they're the ones really, risking everything on a stable coin, whether they're staking or whether they're doing Anchor Protocol, which is the most popular protocol probably on Terra, or at least up there. So it's just interesting to see that. I think he's definitely getting a little bit of blowback. I think people wanted to do a burn rather than a hard fork, but everything's like dead in the water if they do not get developers to come back,
right.
Like, so a lot of this is just like not relevant if he doesn't get people to like essential protocols and essential products to come back to Terra.
And what does the 1 year cliff mean? Is that something where they can't withdraw in that 1 year?
So 1 year cliff is usually references 25%. So usually so if you get a 3-year vest thereafter, you'll get 25% of whatever that amount is after 1 year, and the rest will be over those next 2 years. At least is my understanding. But it's definitely possibly means something different, but at least from my understanding of what a cliff normally is.
Yeah, and that's actually going to be really like let's just assume that Friday goes okay and like they survive and like this protocol like exists in the future. Those cliffs are going to be, or those vesting periods are going to be interesting times to watch, because that's going to be where a lot of tokens get, unlocked. And it'd be nice to have Armada here, honestly, because remember when we were going through like the AVAX, vesting periods and like kind of lining them up with what we saw in the price action and stuff like that. Like, I feel like we could, assuming Luna survives, which is obviously a huge assumption, if they do survive, this is something that to definitely watch out for if you're an investor.
Yeah, because it's also angry investors who are down bad right now. So, they've lost a lot of money. Whenever those cliffs come, if they have a ton of Luna and the new chain is actually successful, they're going to sell as much as they can, at least in my opinion. And unless they're really just wanting to go for the moonshot, but I don't know.
Interesting. Awesome. Well, I think another piece of news to kind of transition us over. Where is it? There we go. What we've all been waiting for. I know Evan mentioned that Vitalik said it too, but apparently another one of their, core developers on Ethereum has signaled that August is going to be, as long as everything goes as planned, August hopefully will be the, merge that we've all been waiting for, where Ethereum goes from a proof of work mechanism to a proof of stake. And obviously this has a lot of implications, specifically for Ethereum and then throughout the whole crypto space. So we wanted to take a little bit of time, kind of go through our thoughts on this, explain exactly what's happening and like kind of some things that we're going to be looking out for come August. And so, I guess we can start at what the core issue is, right? And we've talked about this trilemma in previous episodes before, but it's what kind of every L1, shout out to Armada and all his education for us. It's kind of what every L1 is trying to figure out, right? That balance between security, decentralization, and scalability. One of the issues that comes to mind when you think of a chain like Solana is the fact that, it could be scalable and secure, but given the fact that it's not necessarily as decentralized as others, leaves itself pretty much prone to, network outages and things like that, where kind of the whole chain and everything built on it just doesn't work for a period of time, right? And we've talked about kind of the issues with that, and especially for non-native crypto companies trying to, get accustomed to blockchain, what kind of risks and stuff that poses for them, and just huge question marks in general. So Ethereum 2.0 aims to kind of solve this and solve some of the other problems that Ethereum has had in this sphere, right? The main issue with Ethereum has been the scalability, right? Very decentralized, very secure. You basically can't hack it, extremely centralized, but the scalability, what are the issues? In the proof of work mechanisms, Obviously, there's all the environmental concerns because it requires so much energy. People are wasting shit tons of money on gas, right? It's way too expensive for as a chain to run. And it just I don't remember exactly. Do you guys remember how many transactions per second it can do at the moment?
Yeah, it was like 6 to 12 transactions per second at the
Right.
moment.
And so the entire chain just gets so clogged that transactions can take ages to go through. People are waiting, people are paying crazy amount of gas fees, and there's just unbelievable congestion. So Ethereum 2.0 is basically a transition from proof of work to proof of stake, along with some additional bells and whistles upgrades to really make this chain, kind of fit square in the middle of this trilemma and kind of solve all these issues. So it kind of has three parts. Do you guys, I know, Evan, you looked into Beacon Chain a good amount. Do you want to dive into that a little bit?
Honestly, I'll let you go ahead with that because I feel like you have a better understanding and I can just add on to different parts of it.
Yeah, for sure. So the Beacon Chain, so there's three parts of this upgrade, basically, right? There's the Beacon Chain. This is actually live already for those that don't know. It went live in December of 2020. There's the merge. This is what we're going to be talking about a lot today, which is when the main net, which is Ethereum's main net right now, is merged with the Beacon Chain. And then there's the sharding chains, which is in the future. We'll get to that as well, estimated in 2023, but we'll see. So in terms of the Beacon Chain, right? What is actually the Beacon Chain? The way I understand it and the way it was, when I was reading about it on the website described was that picture you're on a spaceship going to go interstellar into another galaxy or whatever, right? And you realize, okay, the ship isn't meant to go this far. It just can't do it the way it's set up at the moment. So you start building separate parts that need revamping on the side, right? Maybe you build a new engine, maybe you build some more, outer layers and stuff for your spaceship, something that'll help it, be fit to travel the interstellar distance. When you're ready for that, you attach that piece, that engine, whatever you've created, onto your main ship, and then you're ready to go, right? And that's kind of how it was described to me and how I kind of read about it happening, which I feel like is a pretty decent kind of analogy for this situation. So the Beacon Chain is basically a side proof of stake chain that Ethereum has built, right? So this is going to be the key in terms of getting Ethereum to that proof of stake. And when the merge happens is when the main net, which is proof of work right now, and all the data and everything that's on that blockchain gets merged with this Beacon Chain. And at that moment, Ethereum will go from being proof of work to proof of stake, right? And so that's why everyone is waiting for this grand moment. To recap, proof of stake enables you to, not necessarily have huge amounts of equipment and electricity being required to mine Ethereum. It's actually just going to be done through staking. So it's much more efficient. It also enables the potential for much more, transactions per second, right? Through sharding, which we'll, kind of talk about. And yeah, it kind of just goes towards all those issues that, the current Ethereum mainnet is facing.
And so when did they say sharding was coming? 2023?
2023. Yeah, exactly.
And so that seems to be really, in my opinion, the breakthrough that's going to slow or open up network congestion, which it causes the high gas fees.
Mm-hmm.
And so you could see where the gas in the Ethereum network, would still exist at maybe not the full prices that they are right now, but still be significant. Due to the fact that, it's still you're writing to one chain rather than 64 smaller shards, or you can think of them as their own mini blockchains that come to consensus.
Right.
And because of that, it's something where sure you're creating this proof of stake blockchain that really opens up Ethereum to be a direct competitor with Solana, Cardano, Avalanche, like whatever have you. And we've heard about all these other changes being ETH killers, but now this is really an opportunity for ETH to take that market share, kind of throw away that idea that it's going to be multi-chain and let them know that, ETH is the main player in the space. Or, you could see where this launch might go south and all of a sudden it's an open, field for the best proof of stake blockchain in the space. I know that Ethereum has the majority of the developers, but it's the same thing. It's obviously not the price decrease that you would see in Luna or UST, but it's the same thing. Whereas if you're starting to see congestion, slowdowns, or even just failed launches by that like native blockchain that you build on, are there incentives to go elsewhere? So
I think one thing before we get into like the pure bull bear cases that kind of we're thinking about,
right,
a couple things to note here. So one, you make a great point, right? Like it's important to think of in these in like distinct steps. And it's not like anything will materially improve until all of these steps are complete, right? So the beacon chain was like one big check mark. The merge is going to be another big check mark, right? And it's important to note the sharding is not even possible on proof of work, right? So that's why the merge is going to be so important,
right?
Because if we can't even get to the sharding, which is going to be the core thing that decreases transaction costs and things like that by eliminating a lot of the bottlenecks that happen within the blockchain, a lot of congestion. We can't even get to that if the merge doesn't happen, because sharding is only possible on proof of stake, right? So that's why the merge is going to be so important. You bring up a good point, though. It's not like in August, let's say all goes completely smoothly.
Right.
I don't expect to be paying significantly,
which is a big
less.
ask.
Yeah, exactly. Yeah. Which is a big ask.
Yeah.
I don't expect to be paying significantly less gas fees. I don't, because at that point, I don't think that there's going to be any improvement in the transactions per second. The transactions per second will be improved with the sharding mechanism. And just to recap for everyone, the sharding is essentially where the database is essentially like horizontally cut and divided into separate blockchains, right? And so validators then can, from my understanding, validators will then be able to, instead of validating the entire blockchain at all times, be able to validate specific chunks of the blockchain, making them more efficient. Additionally, with the 64 shards, you'll be able to then do more transactions per second, right? And so those two things kind of combined will enable like the lower gas fees, the less congestion and that stuff. But it's important to note, like all of that stuff is not coming, I don't think, until the sharding mechanism actually releases.
But let's talk about like that sharding mechanism and why it's so useful. You're right. It's saying it's all going to be happening, on its own, but in parallel. And that's the biggest thing is you're going to have 64 small mini blockchains that are happening and processing in parallel. And that's where that, network congestion is going to be relieved, because no longer are you going to have only a few ways or one way to get your block onto the Ethereum blockchain. It's going to be like one big door, became 64 doors, and you can all enter the building at the same time.
Right. And so, yeah, that is just a couple like key elements that I wanted to hit on, give you guys an overview of, what we're looking at, kind of the specifics of what the ETH 2.0 rollout means and like why this August merge is so crucial. In terms of the bull case, right? The merge goes as planned, right?
Right.
Like that's like the ultimate bull case in this, like where it goes totally smoothly. There's probably a lot of hype leading up in terms of like price action, I would imagine. in terms of, people buying the rumor. And then it's a question of like how the actual rollout goes. And that's kind of the big question mark, right? Evan, I think you alluded to it, like on the bull case, everything's great, everything's grand. And like basically the L1 discussion, I don't want to say ends, because we're still going to have the issue with the fees at that moment, but it's definitely a big step in that direction of just pure Ethereum dominance.
Well, I think that's an A performance, maintaining that market dominance that they have, and they're able to take it into the proof of stake market. I think an A plus, bullish case for this would be that there are also macro changes that help this. You could see where, the inflation were to cool, the economy stays strong. There's no longer, these basis point hikes that need to happen. Maybe we do it in May, June, and July, but August rolls around and we're starting to see a trend in the economy where it's a healthy economy. We're good to go. All of a sudden, there's a lot of scared money on the sidelines right now that wants to be able to invest in a riskier space that, in the last couple of months, they've talked about how they, don't want to put that money on the line when there's so many headwinds. Where do they go? Into ETH 2.0 after this launch. And I think that's A plus case. The launch goes great. And they also see like these macro headwinds turn around and start working for them.
Yeah,
interesting.
That's definitely a great point, and I feel like that would be a huge catalyst for Ethereum. I feel like the other thing is it definitely opens up the possibilities for wider adoption of Ethereum for like an actual payment method, because like these statistics are as of October 2021, but they did more than $6.2 trillion in transactions. And so if you compare that to, so now like they're on track to do between 6 and maybe 8 trillion. But if you look at what Visa does, it's, roughly about 12 trillion or so.
Yeah.
So they're already doing, more than half of what the leading payment processor, arguably in the world is doing with it. And they're like swimming with weights on, essentially. They're only doing, what did we say? 6 to 12 transactions per second.
Yeah.
And Visa's at about 1,700 transactions per second. So because they're serving, if you think about all of the stores they're serving across the world, they have to process all of these different transactions from whatever, data hub or cloud, provider they're using. And for Ethereum to come in and say, hey, we can do what Visa does with an easier setup experience and for half the cost. Because we were talking about how the adaptability is going to get to the point where maybe this can be used on phones, laptops. So I think the bull case is, hey, we might even get some more institutional adoption, kind of piggybacking off of what Soham mentioned earlier about what one of the, major banks said about the upside for Bitcoin.
Well, yeah, I know we were looking at this earlier, but this still just kind of blows me away where, you guys can see this, right?
Yeah.
This sentence: sharding will eventually let you run Ethereum on a personal laptop or phone. I mean, that is just like, you can then see just the ultimate, like, I don't even know how to describe it. You can just see like the potential there, right? Like,
well, yeah, it's like when you saw Web 2, like we went from, looking at Facebook on our desktops to having Instagram, Snapchat, TikTok, and Facebook on our phones, and all of a sudden that just opens up a whole new arena for like user engagement. It's, it's a game changer.
Unreal.
Yeah.
It's so crazy.
And I really like the kind of the way you guys are thinking about it in terms of like lining it up with, a lot of times there's good news, but it's not met with the best circumstances in terms of like the macro environment or like things basically out of the control of a company or a protocol or something have like impacts on it, right? So thinking about it in the context of the broader backdrop of the macro environment, and kind of, I mean, obviously we can't predict the future, but like thinking about what the backdrop could look like in August. And if those kind of two things line up, it definitely could be, at least a couple of big positive catalysts, you know. Um, on the flip side, on the flip side, like, what do you guys think is like a bear case scenario for the rollout? Like, we've obviously all seen in the world of crypto our fair share of botched rollouts. It almost feels like it's the norm now. And so for me personally, I don't really like get that excited about rollouts because I feel like I'm always just disappointed. And, for me as a trader, it has paid to kind of buy the rumor and sell the news, right? And so what do you guys think, like, what is the ultimate like bear case scenario? And if that does play out, like, let's say the rollout goes terribly, what does that mean for, like, that obviously, like Evan was alluding to, opens the door for a lot of different L1s and stuff to kind of, maintain their, kind of hope to take Ethereum's spot, right?
Yeah. Yeah. And I think, the biggest thing that Ethereum has going for it is the amount of DeFi that's built onto it. I think to lose that customer base on that network would be an enormous loss, something that they couldn't come back from. And to me, that happens. I don't think people are excited for the ETH 2.0 launch, but within reason. Let's say this ETH 2.0 launch, the proof of stake side of it struggles. We see network outages like we do with Solana. Maybe no like problems with actual, bleeding of money out of the system, but you're seeing network outages.
Mm-hmm.
The best idea there is to go right back to proof of work. But the problem is, if they go too far and they slow down the system, because part of the plan is as they move over to proof of stake, they're going to start to slow the transactions on the proof of work side. And that's going to be less like funding for the miners that are working over there. Basically incentivizing the miners to move from proof of work over to the proof of stake side.
Yep.
The problem is that if they have to make that switch back, then it's a huge problem.
Huge problem. Yeah.
And so that's like the bear case for the actual like tech side of the network.
Mm-hmm.
I think like Ethereum's almost like a brand at this point. And so you don't want to tarnish the brand. You want to make sure, like, this is the reason why this stuff has taken so long to put together, is because they do have this like security trust tied to their brand that a lot of these people rely on. And so, I think as long as they are able to keep that brand name, but still make, the best decision at the moment, whether it's moving back to proof of work or just taking out the proof of stake, I think just losing DeFi would be the biggest loss for the Ethereum network.
Yeah. And we've kind of looked at, how TVL on certain blockchains impacts the price of the token, things like that. So you could see, if a lot of people start abandoning the network entirely, you'd obviously see a huge drop in the price of Ethereum. So we're gonna hope that doesn't happen. So yeah, do you have any thoughts on the bear case?
Yeah, I mean, I think Evan hit on a lot of good points, but then I feel like the follow-up question to all of that is, where do those developers end up going, right? Like maybe they have a serious choice between Cardano, Solana, even AVAX might be in the mix, Polkadot. So it's like there are definitely a lot of options out there, and I feel like it's basically like they have to execute on this kind of monumental milestone, and there's all these sharks in the water just essentially waiting to see if they mess it up. And I just feel like it's a lot of pressure, especially because people have been waiting for it since literally ETH came out, because the gas fees are just outrageous. But yeah, I just feel like it's definitely gonna be interesting to see if they can execute it.
Yeah.
And I think something we saw with Solana is that with those network outages, a lot of DeFi platforms or people that were leveraged to be able to, for whatever reason they needed those coins, they lost out the ability to liquidate or to get out of their positions. And that's a big reason why DeFi, it kind of has like a shaky reputation on some of these proof of stake blockchains just because of these network outages. So that's something that Ethereum needs to be like the first proof of stake blockchain to not have, so that these type of financial systems can exist.
For sure.
I also think the overall trust in security and in faith in crypto would definitely get a blemish. You know, to see Terra Luna, which is arguably one of the most popular stablecoins, it is one of the most popular stablecoins, and then the most popular layer one go down in the same year. It'd be basically a picturesque crypto bear case to write and say, this is kind of a telling sign that, crypto is not ready yet for institutional adoption, but that it turns into a good story. But I don't really know. I feel like, given that they've waited so long, I hopefully all these delays have meant something, and they've put the extra, nuts and bolts on it, whatever you want to say. I know it's way more than nuts and bolts. It's like a trillion code lines. So, but yeah, it's I'm really hoping they execute for my bag's sake as well.
And we need them.
We're over invested by a lot.
I think the other like bear case too for the price that goes along with what Sia's saying is that I think in the last few months and even previously, you've started to see Bitcoin trade with like a NASDAQ or trade with like the price of gold in I think previous cases. And you start to see that, people don't need to put their money in crypto to get the same returns in these downtimes or, semi, shaky times. And they could just put their money in a NASDAQ. And so that's a bear case for the prices. We want to make sure that people still know there's, this is an emerging market, emerging space that there's going to be a lot of technology advancements in, and that's why money should still flow into the space. Having those two things in 1 year really puts a blemish on that reputation and maybe starts to change that narrative.
That's a really, really good point. Because I feel like that was always every non-crypto investor's point who kind of favored the stock market or just general ETFs, is like, hey, like that's way too volatile for me. But at the same time, if you're losing 15%, in a week or whatever it is on SPY or on one of the NASDAQ, ETFs, it's basically the same thing.
Right. So, I mean, and maybe it's something where, I don't know, there's a lot of money in the space, I think, that's got like a 10-year horizon when you're looking at, a university endowment or even just, people that really believe in the technology. But that's something that only continues when we have breakthroughs in the space and when we have, venture money coming in, creating runway for, whatever companies are kind of emerging. So yeah, we need a win in the space at the moment.
That's for sure. And I keep coming back to like almost, I'm like yet to really see like an ultra smooth new rollout in crypto, right? Yeah. Like even going back a couple of weeks to like the Yuga Labs,
the other side.
The other side mint. I mean, like that was a total nightmare. Like, I don't know, we've all seen releases that just don't go as planned. The question is like there's obviously going to be kinks. The question is, are they going to be serious or not? Right.
Yeah.
A few kinks here or there that piss off a few people, but in the grand scheme of things are like not that big of a deal, is like low key like the bull case, right? Like I find it really hard to believe that there's not going to be any issues. It's just a question of like, how big are the issues going to be, right? And so that's why it helps to kind of like, really dig deep and do the research on the protocol, because I feel like by doing that, hopefully we'll have a better idea of like what is considered serious and like what is like kind of a passable issue that, might be temporary, might be small, but in the grand scheme of things doesn't wreck this big picture view that Ethereum has, right? Like kind of the 3 steps and getting to that place that they want to get to, right? It'll be interesting to see how it goes. This is also assuming a lot that August is actually going to come around. I mean, they've said this is going to get released for like the last 2 years, right? So
yeah. Well, and I think another note on the bear case is, let's say the Ethereum 2.0 launch doesn't go as planned. It's a huge bullish case for L0s, layers that are going to be integrating a lot of different blockchains. And so it's like, yeah, there's going to be a loser and a winner in this. And I think, I don't know, it'll be interesting if this launch doesn't go as planned and you start to see this proof of stake market shares shift over to Solana, shift over to Avalanche. It's going to create a lot of competition in the space that I feel like we've talked about, but haven't really had.
Yeah, I feel like the biggest thing out of the gates is definitely gas fees. Like I feel like that's like number one thing that affects every person that uses MetaMask or interacts with Ethereum blockchain. That's like the number one thing on their mind. So I think addressing that, if they could somehow lower those effectively, like noticeably within the next year, that's a huge win. Like if they can like cut those in half or 25% or something, I think if people see some sort of progress as opposed to, because I think we'll probably see something in between a complete collapse and, amazing smooth success. So like somewhere in the middle where I'm hoping they can cut gas fees to some extent, even at the merge. And then obviously over the course of 2023 with sharding. So if like halfway through 2023 or May 2023, if they have something that can lower those gas fees substantially and noticeably, can't even speak, then I think that is, definitely the way to go about it. And maybe not necessarily go for the perfect landing, but do something like that.
Yeah. We're looking for good enough.
Yeah. Yeah. Exactly.
The other thing to realize is like, so then you kind of like, this is what we were talking about a little bit before, like, then you look at it from like, what does this mean for L2s on Ethereum? Right? And so right now you have a situation where, let's say Gwei is like completely out of bounds, like 500 or something, right? At the same time, you can go on L2s like Polygon and stuff and still do transactions at like fairly like cheap, at least relatively cheap price, right? And so you think about, let's say they can even cut gas fees by a bit, right? Let's say they can cut them to like 25% of what they are or whatever, right? Maybe even less. Let's say 10% or something.
Yeah.
Ideally, they're going to cut them by a lot more.
Yeah.
But let's say just say they can cut it by like 10%, right? So every transaction costs 10% of what it does now. That from an L2 perspective, now all your L2 transactions cost like a cent, right? Because L2 transactions are already a huge fraction of what it costs to operate on Ethereum. With Ethereum getting more efficient and those being built on top of Ethereum, you can expect really good gains on the L2 side, right? So just another kind of thing to think about, something that we had talked about a little bit earlier, but I just kind of thought of now. I kind of mentioned it when we started talking about this, but the repercussions to the rest of the crypto industry from this merge are going to be huge. Yeah. And so no matter what happens in this, it's going to be a huge event, and there's going to be ripples felt kind of throughout the crypto space, right? And we've kind of touched on a little bit of what that could look like, but yeah. Ed, what were you going to say?
I was just going to say that we've talked about it in previous episodes, but in the NFT space, gas is something that holds a lot of people in some of these like low floor NFTs. All of a sudden you take gas out of the equation and some of these projects, instead of sitting at 0.05 or a 0.1, they go to 0 actually.
Right.
And so I don't know, like there's a lot of like waves, repercussions that like we'll see if with a successful launch, that I like will only continue as we get to the merge, then to sharding. Like, there's gonna be the space is always evolving, and it's gonna like have a huge change if there's a successful launch here, because you're right, it's gonna kill a lot of competitors. And I don't know, I would be very excited as an end user to not be paying $60 on some random transaction I'm doing.
Totally. Yeah, you bring up a good point in terms of like, I mean, this happens in the coin world too, where if you're buying coins on the Ethereum blockchain, like you're almost forced sometimes, at least the small players are forced to basically diamond hand.
Right.
Because like if you just paid $100 in gas and you bought something worth $50, you're gonna need to go up by whatever 3-4x just to break even. Yeah, you you gotta like 3-4x just to break even. So I mean, I'm sure that's a similar thing in the NFT world, and definitely something to keep an eye on.
Yeah, we'll see. I'm excited. I could very easily see it being pushed back to later in the year. I think it's going to be right in the middle. Like at the end of the day, there's going to be hiccups. I think it'll have a semi-successful launch. It won't need to go back to proof of work. Kind of in summary, I really wonder what the miners on the proof of work, like Ethereum proof of work miners, are going to do. I don't know if that's I feel like a lot of people mine because they're early to the space. They love the technical challenge of it. And it's interesting. Like it's a very active way to make an income when you're always trying to figure out if the price of Ethereum is high enough where it makes sense to keep your computer on, keep running. Move over to the proof of stake side, and it's a totally different game. It's all about size. It's all about like just housing enough within your pool to be able to have significance in the network. So it's going to be a huge shift for the end consumer, but when you're thinking about other, profiles or personas in the network, like a miner, it's also going to be a big shift too. So there's very different dimensions to how this will affect different people in the ecosystem.
Absolutely.
Yeah, couldn't have said it better. But I mean, I think that's gonna do it for this week. All I have to say is, if it gets pushed back or not, we'll still be here. We'll still be covering the story. Got a lot to talk about. So yeah, stay tuned to our listeners. If you're interested in Ethereum 2.0, we're definitely gonna have a pulse on it. And we'll be putting out more videos as kind of more news comes out and we get closer to that highly anticipated merge date. Awesome. Well, as always, what?
Shout out to Dan, commented on the last video.
Oh
yeah, shout out.
Yeah, shout out to Dan. We appreciate the comments. I was just gonna say, if you guys have opinions, thoughts, anything on Ethereum 2.0, we'd love to hear it. Shoot us a comment down below. Otherwise, if you found anything useful, give us a like, give us a subscribe, and we'll see you same time, same place next week. Signing off, and Armada will be back too. So
yeah, we'll have Layer 1 God back. Misty Mata.
Yeah.
All
Awesome.
right.
Cheers, guys.
Later, guys.
Peace.